This is our Forex blog for July 11th, 2011, and like most days, we really want to buy the strongest currencies versus the weakest. There was no doubt whatsoever that the euro was super weak against all the currencies last night. It was the weakest one. Meanwhile, we had a super strong Swiss, we had a very strong yen, and the dollar was also strong, even though the monthly trend on this one is actually down. So basically, you wanted to sell the euro dollar, sell the euro yen, and especially sell the euro Swiss. They were the most no-brainer trades all night. Let's look at the euro dollar trade. First of all, when price is underneath the hourly, this is something that we've taught for 5 or 6 years. It's more likely to go down. And most days, the lower containment band is where the price stalls and reverses. On days like this, when people are wondering if the euro currency is even going to exist in 3 years or a year, even, it's just a straight one way down. So when price is underneath the hourly, here's some of the entry signals you'd want to take. Sideways consolidation, pullback trade right here. The trailing stop got you in out here for about 55 pips. Another sideways consolidation. I don't know if I would have sold that one because you have this fib target right here. It doesn't. Every time you should take a trade, you should say, well, what's the odds of this working? Well, the trend's down. The euro is one of the weakest ones, so the odds of it going down is probably 70%. This was likely at the time to be the low of the day because it's a Fibonacci profit target level. It's underneath the lower band. You don't know if it's going to go lower, and so for that reason, you might not have wanted to take that trade. Well, when there was no bounce off of this fib level, and the market went sideways again for about an hour or two, when it broke down again, you want to go short because now the next profit target level is the next fib target, and as you can see, it went below that to the next one. But this one had a good risk-reward ratio. You have maybe 65 is your profit target. If you sold the low here, it's around 10. That's a 45 pip potential profit with risking 10 pips. So you're short right here, and you can see our trailing stop got you out right here. There's a bunch of counter trend trades, signals, but the euro is just flat out the weakest. And again, at this level, it went through it, which anytime a support level gets broken, it's a huge sign of weakness, and you'd expect the bounce here. You're waiting for a bounce up to sell it again, but there is no bounce. It barely went higher, and then it came down. So even though this is a risky trade, the euro was by far consistently the weakest one today, and it was weak for a reason. So you short here, and here's your next profit target level, and again, that profit target level is about 75 pips away. So why not risk 10 pips to make 75 pips? And then it went down again, and if it comes down in double bottoms here, being this far underneath the lower band later today, you might want to give it a small buy trade here, but the euro is just ridiculously weak. And the Swiss is even stronger than the dollar. Let's look at the euro Swiss. Again, notice price is underneath the hourly. It gapped down yesterday, went sideways for many hours. So this is a no-brainer trade right here. And I don't do the Fibonacci analysis on the euro Swiss. So you might go short there and get out with your profit target. Go short again on this little pullback. And notice our trailing stop kept you in all the way down here to the low at 33. You made well over 120, 130 pips on that trade. And being so far underneath the lower band, I would not personally have sold here when the trailing stop got triggered. But if you had, notice the trailing stop got you out again with a nice 40 pip profit. Let's look at the euro yen. The yen was also extremely strong, maybe at times stronger than the Swiss, and other times not. This one also went sideways for quite a while. It broke the previous month's low, and then when it started to break down right here, it's a pretty high probability trade. This is your first profit target. You might have got out of your trade here, and when it broke underneath there, I might not have sold that because the 200-day moving average is right here. But once it broke the 200-day moving average and got no bounce for about an hour and a half, 2 hours, when it broke right here, very high probability trade. This is your next profit target. There's no support until down here at 43. It's about a 50 pip difference, and you can see our, you don't want to just get out right here. If the trailing stop is still going down, you hang on, and it got you out right here, almost at the exact low, 113. So you're short this at 92 area. You made about 90 pips. Phenomenal trade. And again, this thing kind of went sideways for 2 hours. Usually that's a good trade. This one kind of has a trend line going up. It went up, made a slightly higher high, and then double topped right here. Very risky trade being so far underneath the lower band, But again, today is not one of those normal days. You got to know when to. Normally, we never sell underneath the lower bands, especially when they're 20, 30 pips underneath it. But today, the euro was falling for a reason. So, if you do take that trade, use our trailing stop to get you out right here. The reason I created this trailing stop is it has a super tight stop, and as soon as the momentum slows, we tighten the stop even more, and it gets you out. So in the past, we would not normally take a trade like this because you never know when to get out. Sometimes they go down 5-10 pips and then explode up. But now with the new Intellis stop, you can lightly take trades like that. I would cut my trading size in half in any trade that's super risky like this. Yes, if it works, you're going to make a lot of money, and no, it doesn't work a super high percentage of the time, maybe 50-50. So, be very cautious on these kind of trades. Now, if you didn't trade the euro today, remember the dollar and the yen are super strong. Pound was also weak. The daily, weekly, monthly trend on this is down. So, it wasn't quite as good as the euro trade. But starting today off, price is finding support. The hourly can't get a bounce off it. And normally when a currency hits the hourly, you get a bounce off of it. So anytime something that hit, a support or resistance area that gets hit and typically has 60-70% chance of something happening, when that something happening doesn't happen and the market goes sideways, when it breaks down, it's a very high probability trade. And the next profit target is right here at 95. You sell the low right here at 13. You got almost a 20 pip potential profit while risking 10 pips or less, and your stop gets hit and you're out here. Again, this is a support area. It's likely to come back up to the hourly and see if it can go above it, and there's no buyers here. Dollar's strong, and you can see what happened after that. Let's look at the pound Swiss. This one's also going to fall. Notice it's also underneath the hourly. It came back and tested it right here. Very high probability trade. Very high probability trade. Anytime you can get into a trade near the middle of the range, you have our lower bands as your potential profit targets. And this one kind of chopped around here. You would have been out near the lower band. And again, you got no bounce. So anytime the lower containment bands get hit, usually you get a bounce, probably 60-70% of the time. When you don't and the price goes sideways, very low risk trade right here. You're short. You might have got stopped out with a trailing stop because of the noise. It was kind of chopping around. You go short again, and it got you out right here. You can also use the fib targets as profit targets. Most of the time the first and second fib, notice to the pip, hit the 1.618 fib and bounced. So if you're way underneath the lower band, consider exiting half your trade, the other half of your trade. Your average exit price would have been around, 3,300 here, and you made about 60 pips on that trade. Notice also, the yen is very strong, so the pound yen also a very high probability trade. You got major support here and here, but once it breaks this level, the next support level's here, and then my next Fibonacci profit target's down here. It's pretty much a no-brainer. When this kind of went sideways here for 2 hours and then broke down, you're short. Notice our trailing stop got you out right here. Most people might have even just manually exited at the second fib target. Rarely, I spend about 40 minutes every night drawing these fibs on the charts, and rarely does the second fib target get broken, especially when it's 50 or 60 pips underneath the lower band. So don't get greedy. It's also, the fib target's coming up right here. Get out of the trade right there, and don't go short because usually this is the maximum low. Let's look at the pound dollar also. I think we already went over this one. Pound dollar, or that's the pound Swiss actually. This one didn't fall quite as much as the other ones. Notice the Fibonacci profit target. Usually that one finds some support, and it's worth looking at as a possible counter trend area. Those were the best trades last night using the currency meter and basically focusing on trading the weakest pairs versus the numerous strong ones. I mean, there was a lot to choose from last night, more so than most nights. You had the euro dollar, euro yen, and euro Swiss to sell. You had the pound dollar, pound yen, and pound Swiss to sell. And there were times where the CAD also was weak. So you have the CAD yen to sell, dollar CAD to buy. Let's just take a quick look at those. CAD yen, notice fell off a cliff. Dollar CAD to buy. This was kind of choppy. It wasn't one of the stronger pairs, but if you bought every little pullback, you probably broke even on that, made a little bit, made 30 pips on that one, and then it became very choppy. The CAD wasn't consistently as strong as some of the other ones. And you also have the CAD Swiss. This one also is going to, it wasn't the consistently weakest one like the euro and the pound were, but you wanted to sell this one. Notice it's underneath the hourly. You have a small profit here, a nice little pullback here, small profit, goes sideways for a few hours, small profit, and this one here, when the Swiss became super strong and the CAD was the weakest during that hour, it fell about 70 pips.